All right, let's continue the conversation now. The Congress of South African Trade Unions, Cosatu for short, is calling on the National Treasury and the South African Revenue Service to consider tax concessions for low-income workers, among other measures. Let's understand the Federation's proposals now, and we speak to Cosatu's Matthew Parks. Mr. Parks, good evening to you, and thank you for your time. Let's begin with the lobbying that we understand you are mounting, particularly to National Treasury, for a substantive, or should we call it substantive, changes to the two-pot retirement system. Tell us why.
Sure. Good evening, Colleen. Thanks for having us. I think let's first appreciate as Cosatu that we are here today. This is the two-part reforms for the pensions was a campaign Cosatu started in 2020 during COVID, when many workers couldn't get paid, and yet they had money in the pension fund. But even probably beyond COVID, we have workers who are drowning in debt. They're struggling with the cost of living. They're struggling to make ends meet. And the crisis in the current law, why we reformed it, is that currently workers couldn't get access to the pension funds unless they retired, they lost their job, or they resigned. And as a consequence, thousands of workers every year would resign out of frustration, out of being highly indebted. And that really created a crisis probably of workers resigning and then being unemployed. They will not find a job easily in this economy. And of course, depleting out the pension funds. And the crisis that also then created is that only 6% of South Africans can afford to retire. So that's another crisis we're dealing with. So the new reforms allow workers relief. Immediately they can cash, as you said, up to 30,000 Rand from existing savings. Also going forward, once a year, they can access a third of future savings too, if they want to. If they don't want to, they can allow to accumulate, to grow, to collect interest, to roll over, etc. They can choose how much they want to access out of it. So we're beginning to give workers choices. So we're beginning to put pension funds to support workers during their career and in retirement. So the initial reform policy was really the first start of a journey to give workers some choice, to avoid resignation, to give workers an alternative besides cashing out everything, and also to boost savings in the longer term. So we've made about 5 proposals going forward. One is to make sure workers retain access to all their savings if they lose a job, because you can't tell a worker who's lost their job, they might lose their house, yet they've got money saved in the pension fund. So that's the emergency scenario. Treasury has agreed to that in principle. We need to flesh it out in modalities. The second one is that, can we allow workers further access to the existing savings, which is in the vested pot? That's the savings they've accumulated by 1 September this year, which is parked in a vested pot, where they retain access to it upon resignation. So we want to say, why don't we allow workers, if they want to don't force them, but allow them the choice to transfer that to the two-part reform, where 2/3 goes for preservation and a third goes to savings which they can access, to allow workers to pay off debts but remaining again employed, and also boosting savings as well. We also want to say, can we have a conversation? It's not an easy one, but can we make the tax regime more easier on low-income workers? Because right now, many workers do fear that if they do withdraw from the two-part reforms, they might unintentionally push into the next tax bracket where they get hit with some tax. And look, there has always been tax on pension withdrawals, but we want a discussion about, can we make it a little bit softer on the low-income workers?
Exactly the point I want to come to next. The tax element, Mr. Parks. And the demand is so high. I was just reading a story on News 24, and they are suggesting that between the 1st of September, which is when this officially kicked in, and the 10th of September, I think that was yesterday, SARS has been processing nearly 18,000 tax directive applications per day. Now, it's worth a reminder that these withdrawals are taxed at a marginal rate depending on the tax bracket. And this is where exactly you are going with this. Firstly, could this call have come a little earlier from yourselves to National Treasury?
Yeah. So Claudia, we had this discussion over 4 years. Since 2020, we have made a variety of proposals around tax. In fact, ideally, we wanted this to be tax exempt because workers are drowning in debt, and we did not want Treasury or government, rather, to be seen to profiteering, for lack of a better English word, at the misery of workers. But look, negotiations is about give and take. The previous tax regime was actually not progressive at all. It treated everybody the same. That the initial amount was tax free. Then after that, there was a flat 18% tax rate. And the unfortunate part of that one, Paul, is that we're treating a clothing worker who doesn't normally qualify to pay income tax because she earns so little, or a cashier at ShopRite, for example. We're treating them the same as we would treat the CEO of a mining company, the CEO of a retail company, or a DG of a government department. And that didn't make sense because the tax regime must always be progressive. We must make sure those who earn the least pay the least in tax, and those who earn the most pay the most. So it was very difficult to defend when government said, let's move it to a tax regime which linked to your personal income tax rate.
Yeah.
Because we've always been biased towards workers, low-income workers. But having said that, we do think there is a need for further discussion. Can we be a bit more biased towards those who don't pay income tax and those in the first two, the lower tax brackets as well? The tax has always been there on pension funds, and it's geared that we incentivize with a tax deduction for Polly to help him save for when he retires, because otherwise he won't save. That's the nature of life. But also, if you do when you do withdraw, there's always been tax. And of course, if you withdraw prematurely, when you're not at pension age, then the income tax kicks into effect. That's the nature of the regime. If you don't have a tax regime, no one will save. That's just the nature of life because there's so many pressing issues. But we also need to balance it to make sure that when we do retire, we have enough saved, because the state pension will never be enough to sustain people.
Yeah.
And you also don't want to be in a scenario where you are dependent upon your child who may also be having obligations. So I think our point, Polly, is that we want to have a discussion to see what can make sense. And let's see if we can't give a bit more comfort and a bit more ease to lower income workers.
Do you foresee a role for insurers or indeed the pension fund administrators in this tax discussion? Because the understanding is that they also are beneficiaries to some degree.
No, there must be a discussion, and we've had discussion. In fact, we met today this afternoon at NEDLAC, or we were meeting weekly at NEDLAC with Treasury, obviously as Cosatu, with the Financial Sector Conduct Authority, with the pension funds, as CISA, which is the body association, GPF, and so forth, to do the logistics. But I've also said to them, look, we have made proposals as Cosatu to Treasury last month on the next round of reforms, including on tax. We will want to have a discussion. Ultimately, this is actually a very unique scenario, Polly, where you actually have consensus between government, Treasury, the pension funds, Labour, Cosatu, business, that this makes sense given the South African unique circumstances of high levels of poverty, of indebtedness, of resignations. In a normal scenario, if we were Sweden, we wouldn't do this, but this is a unique compromise to address South Africa's deep-seated socio-economic issues, giving relief now, but also boosting savings. So we think there is a need to include industry experts, because we don't have all the answers. We know they will have some expertise. We're also able to share the frustrations, the difficulties of workers. And of course, Treasury also has contributions to make. We're confident we can do so. We need to do so quite quickly because the bills have already been released. These bills are amended once a year, the tax bills. They've already been released for comment. They will go to Parliament with a medium-term budget statement on the 30th of October.
Yeah.
Parliament will get a briefing next week. And you want to get all of this done by the next tax year, because these are linked to tax years. So we're keen to get some proposals pushed through Parliament for this round. And of course, we'll have some further ones for the next round. But we don't have a huge amount of time. But I think we have built a good core between ourselves and business and government on giving further support to workers whilst boosting savings in the longer term.
Yeah. Just as a final question, and briefly, if you can, on this draft amendment bill, this is where you actually are going to try and peg this. You are quoted as saying you also are going to remind Treasury, when that meeting happens between yourselves, that it previously agreed to amend the two-pot legislation so that retrenched members will be allowed to access their retirement component. Do you foresee a scenario where Treasury could potentially renege on this previous agreement?
Look, it'll be a disaster if they did renege on it. Under the laws, all these years, if a worker lost their job, they were retrenched, they were dismissed, they had access to all the savings. Because no worker wants to lose their job. But we have an economy with a 42% unemployment rate. Many workers have lost their jobs. We've had the last 3 quarters of increasing unemployment. So our principal position is that if a worker loses a job, they must have access to everything. Because you can't have R500,000 Rand, for example, saved in your pension fund. You owe 200,000 Rand in your house. you lose your house, which you spend hundreds of thousands of rands, etc. You can't be told that I can't feed my children, get them to school, yet I've got R1 million in my pension fund. That would be immoral and unjust. Under the current law, they have access to that. Under the new law, you have access to your whatever you saved on 1 September, whatever you put in your savings pot. So there's just simply the issue of the preservation part, just that one part that needs to be dealt with. We have some time, but we don't have unlimited time. So Treasury had agreed in our engagements, extensive engagements at NEDLAC at Parliament, that if a worker loses their jobs, yes, they must be given full access.
Yeah.
There's the issue of modalities. There are some of the ideas which I think are quite practical. I don't think it'll be too difficult, but I think for us, the sacrosanct issue is, come the next tax year, next year, this must be resolved, because you can't tell a worker who's lost their job, good luck, but you won't be able to take care of your family. That will be a fundamental crisis. But we are convinced, and we think in our initial engagements, we think government is on the same page as us, and I think industry colleagues too. Is a question of modalities, but they're not that difficult to resolve. But the will must be there, because these must be resolved by the next tax year.
Matthew Parks is Cosatu's parliamentary coordinator. Thank you very much for your time.